Dear friends, welcome to Weekly View on Markets. Bulls continued their march during this week also. The market was buoyed by the state election results, which came out at the end of last week and gave a fantastic rally of 3.46%. Nifty was up by 3.46% during this week. On Friday, intraday Nifty crossed 21,000 level and closed at 20,969. This rally was broad-based in which all sectors, mid cap, small cap stocks also participated. But mid cap and small cap stocks corrected on Friday. There was RBI MPC committee meeting, that is a monetary policy committee meeting during this week, and RBI held the interest rate. One good thing is that there is the GDP growth estimate from 6.5 to 7%. Technical indicators of the markets remain very strong. Markets are trading at premium valuation because the market has run up a lot in a short period of time. That is why the valuations are premium in the market. But there is growth expectations in the economy and the corporate earnings. So market will continue to trade in premium valuations. Investors have to be very choosy in picking the stocks, but I don't see any big correction coming in the market. Nifty has gained 3.46%, that is around 700 points, and closed at 20,969. Bank Nifty is also trading at record highs of 47,262, went up by 2,447 points in 1 week. That is a gain of 5.46%. So I had predicted in my previous week that there will be more rally in the bank nifty compared to other sectors, which you would have seen that it has come true in this week. And I'm also told that bank nifty is headed towards 50,000 level, which we will see in the coming weeks. Mid cap has closed at 44,400, gained more than 1,000 points. That is a gain of 2.35%. Small cap indices is at 14,403, gained 164 points, 12.47. India VIX is at 12.47. The volatility in the market is less. The market is quite stable. Almost all the indices are trading at their life highs. So market is really making newer highs, and it will continue to make newer highs in the coming weeks also. But there will be intermittent corrections and volatility in the market. Investors have to be very careful in picking stocks, and also they should have a longer term horizon for investments to make money from this market. Now let us look at sectoral performance. The crude prices have dropped to almost $75 per barrel, and that has resulted a huge rally in oil and gas sector and energy sector stocks. The energy sector has gained around 7.9%. Energy stocks have that oil and gas stocks have gained more than 6%. PSU banks continues their dream run, more than 6% rally there. Private banks also participated more than 5% rally in banks. NBFCs are also around 5% up. Infrastructure, commodities, reality, information technology, auto, all are gaining 2 to 5% during this week. So the rally is very broad based. There is buying in all sectors, mid cap, small cap, large cap, everything is going up. Only few sectors like pharma, FMCG, and healthcare We have seen slight losses, but it is not major loss. Now let us look at technicals of the market. Technicals of the market continues to remain very strong. We'll see that in the charts. See the daily chart of Nifty. As we can see, Nifty has touched the record level of 21,000 and then it has closed at 20,969. So to understand what is in store on a longer time frame, we'll have to look at the weekly chart of Nifty. This is the weekly chart of Nifty. Here we can see this is the lowest level which was done during the COVID crisis, that is 7,600 on Nifty. And after that, COVID, we have seen a vertical rally up to 18,600. So this entire rally in a short period of time forms the pole of a flag. This entire structure which I have drawn is called a flag pattern on a longer term, that is weekly time frame of Nifty chart. And this kind of technical formation gives a target of 30,000 for Nifty. Yes, I am again telling Nifty longer term time frame as indicated by the technical charts is around 30,000. So Nifty has just gone up by 18,000 level to 21,000 levels, and there is so much profits or gains in stocks. Please imagine if Nifty goes to 30,000 level, what kind of profit people will see in their stock portfolio and mutual fund portfolio. And yes, that is going to happen, but not in the short time. This is on a weekly chart. There will be only one candle per week. So it is a longer term time frame chart. This is a longer term 3 to 4 years or to 5 years time frame. What I am talking about, we'll see Nifty touching 30,000. If Nifty touches 30,000, we'll see Sensex going beyond 1 lakh. Yes, Sensex going beyond 1 lakh within next 5 years time. So now let us look at chart of Nifty Mid Cap Index. This is again Nifty Mid Cap Index daily chart. It is making higher tops and higher bottoms. The chart looks very strong. On a weekly pattern, again, we see similar kind of formation as we have seen in Nifty chart. The mid cap chart also is having a similar formation. The Nifty mid cap index is also going to go to record high levels. Now it is trading at around 44,000. So this may go beyond 62,000 levels in next 3 to 4 years time. Now let us look at Nifty small cap. This is the Nifty small cap chart on a longer time frame, weekly chart. Here also we see similar kind of formation on Nifty weekly chart. The Nifty weekly small cap index is trading at 14,400, which will go around 25,000 levels in next 3 to 4 years time. Now let us look at Nifty Bank. This is the daily chart of Bank Nifty. As I have told earlier, the Bank Nifty has seen the maximum gains during this week. Bank Nifty has crossed the crucial level of 46,000. So 46,200 remains a strong support now, and Nifty is headed for 50,000 level. Sorry, the Bank Nifty is headed for 50,000 levels in coming weeks. Now let us look at some of the fundamental factors of the market. See why we are seeing such a big rally in the markets. There are fundamental reasons. Indian economic growth is quite good. We are the one of the largest economies growing at the highest space. So globally, there is a lot of interest for investment in India, and India is a big market. We have got 140 crore population, which is a big market, and inflation in India is under control. There was a RBI policy committee meeting during this week in which they have not raised the interest rate. RBI is very confident that they are able to control inflation and inflation will trending, inflation will be coming down in coming months. RBI has raised the GDP estimate from 6.5 to 7% for the current financial year. This is a very good news for the market. When such growth is there in the GDP, the corporate earnings, that is the company's profits will go up. When companies' profits go up, the stock market gets lot of confidence. That is why we are seeing buoyancy in the stock market. And also there is private investment coming into the economy now. Government has done heavy lifting and spending a lot of money on infrastructure in last 2 to 3 years, and private investment was lacking. Now we are seeing that the capacity utilization of private companies has crossed 75 to 80% level, and the private investors are going to invest in the capex. Because of this, lot of banks, NBFCs, even PSU banks are raising funds from the market. We must have read in newspapers that lot of fundraising is going on from the financial institutions. Why they are raising funds? Because they are seeing the credit growth from the companies. PMI index for services has come during this week for the month of November 23, which has come at 56.9. It is slightly lower than earlier months, but still 56.9 is a good number of PMI index, and it indicates strong expansion in services. RBI dollar reserves have gone to the record level. RBI is holding 604 billion US dollar reserves at the weekend. So that shows that the economic fundamentals of economy is quite strong. INR USD rate is at 83.43 and dollar index is at 103.9. Comparing to all other currencies, Indian currency has been quite stable for over a year now because of the strong economic performance of Indian economy. Gold price is at 61,160. Gold price hit almost 64,000, and after that it has corrected. So I had cautioned against gold investments in my previous week. I expect that the gold prices will consolidate for some more time at these levels. Crude prices have come down to $75.95 per barrel. So I had told in my earlier weeks that if crude price falls below $80 per barrel, we will see a huge rally in the market and also in the oil and gas sectors. We have seen that it has uh, resulted in especially oil company stocks going up by 10 to 15% in last 1 month. FIIs continues to buy. They have bought 9,285 crore. DIIs have bought 4,326 crore during this week in equity. Continued FII and DII buying will definitely help the market, and I don't see any big correction coming in the market unless any unexpected global developments take place. Investors are advised to stay invested and benefit from the Indian growth. Invest for long term. In short term, there could be volatility in the market because markets have already run up a lot in expectation of the good corporate earnings. But market cannot keep on going up at the same pace week after week. There will be corrections, there will be volatility, but the long term view for Indian markets is very bright. As I have told you, Nifty is likely to touch 30,000 levels in next 4 to 5 years time. Sensex will go beyond 1 lakh. So have these things, and Indian economy is likely to grow 6.5 to 7% for next several years because of the strong economic fundamentals that have been built up in last 10 years. So because of all these things, we'll see very good prospects for the investors. Only thing you need to invest for long term. This is all for this week. We'll meet again next week. If you like my channel, please subscribe to my channel. Give your views, refer to your friends, and we'll meet next week again. Thank you.